All right, it's time for another strategy lesson. This is lesson 11, strategy 4, the ACB, which stands for the Advanced Continuation Breakout. It is an advanced strategy, just like the ABO, the Advanced Breakout. Similar, but different. This is the Advanced Continuation Breakout. And again, it kind of builds on top of the strategy. So typically, first we have the ABO, then the IBO, then the CBO. And sometimes the CBO is missed, like it doesn't present the CBO entry, and then the ACB comes. And it typically happens like near the end of the trend, right? So this is kind of like where it's typically like the last strategy before it's too late, to be taking any other trades in that specific direction. So it's typically the last move that we can get before the trend dies and reverses and starts to give ABOs, IBOs, CBOs, and so again, right? So the ACB is typically like the last strategy in the trending market. It's a nice one. I like it, but it is advanced, and you'll probably have about, out of 100 trades, maybe 5 to 10% of them will come from the ACB. So it is a little bit more rare. It's not as common as an IBO or as common as a CBO. But it does happen, and it is very unique, and it does stand out. So that said, let's have a look at our notes here for the lesson. So the Advanced Continuation Breakout, the ACB, Advanced Continuation Breakout, is targeting the wave 5 run when it comes to the wave theory, right? So we're targeting the wave 5 run. That means that we had a wave 1, wave 2, a big wave 3, a wave 4 pullback, and we're trying to capture that wave 5, and then the trend is done, right? So that's kind of what I meant, that it's typically at the end of the trend or the last move of the trend. Some characteristics of it is that it typically has an overextended wave 3 run. So it's kind of those setups where wave 3 just kind of fucking pops, has a big wave 3 move, right? And then it requires a deep wave 4 complex pullback. We'll draw this out, and I'll show you the screenshots in a second. So a characteristic is that it kind of like, maybe you might have a CBO on watch list on Tuesday, and it doesn't pull back. It just fucking continues to go into this big wave 3 run, right? Never pulls back for the CBO. It just fucking goes. And then tomorrow, the next day, it finally has this kind of deep pullback, which is typically a complex ABC pullback. And it goes to maybe 0.618 Fibonacci retracement. That complex pullback typically ends up being around 0.618 Fibonacci retracement versus like 0.382 on IBOs and CBOs, right? This one, like when I said it goes deeper, typically down to 0.618 Fibonacci retracement. And it's a break and retest of the 4-hour 50 and the 1-hour 200, right? The 1-hour 50 is not in here, right? We're trading through the 1-hour 50 EMA. It's the breakout. The breakout here is, again, trading through the 1-hour 50 EMA. Just like the ABO, we're trading through the 1-hour 50 EMA, right? So what does this look like? Let me show you a screenshot. And then we'll have a look at our drawing, right? So here's a screenshot of an ACB, and let's kind of go through the characteristics. On a daily chart, we're typically going to be running already for a little bit, and then all of a sudden we have this pullback, quick 1 to 2 day pullback, right? And a lot of times the ACB actually occurs like this, where we had maybe like an ABO on a higher time frame on a daily chart. This is a daily chart, right? So imagine like the daily chart, a lot of times it looks like this, where price action just kind of breaks down, changes trend, and has a quick retest of the EMAs, right? So that's typically the characteristic. Not always, but I mean, it's typically what it looks like. There's a run on a daily chart and a quick retest of something, Most of the time it's the EMAs and it looks very similar like this. Sometimes it could be a break and retest of a horizontal level, you know. Um, yeah, like in this case right here, you see this price action right there. Imagine this just kind of broke out and had a quick 2-day retest. It had like a 4-day retest, but imagine this was just like a breakout, quick bounce, and a continuation, you know. But mainly it's this daily chart. If I show you a few other examples, here's another one, right? You'll see this daily chart is very similar, right? We were in a bullish trend and then we had a big move to the downside and a quick 2-day retest before price action continues. This is actually like perfect daily. And this is another example of a similar but not so perfect daily, right? Same kind of thing, right? It was trending down and then it had this big pop and a quick retest. Now in this case, this one's so from a daily direction prediction because it's holding the 1 hour, the daily 50 MA, right? It's much better if it breaks and kind of retests the daily 50, but this was kind of retesting a trend line, right? And it still looked decent, which I'll show you the lower time frames in a second, right? So that's kind of what the daily chart looks like. Now the main characteristic is actually the 4-hour and the 1 hour, right? Most of ACBs will look almost identical, right? Roughly similar to, I mean, they all look similar to each other. The ABO is a very unique pattern. The IBO is a very unique pattern. The CBO is a very unique pattern. And the ACB is a very unique pattern. And these patterns happen over and over and over and over again, right? Which is good. So what this typically looks like is you see this price action here on a 1 hour chart. Well, when this went into this big kind of move and it broke out, on this specific day, it should have pulled back for a CBO. But it never did. It just kept on going. And that's kind of what I meant. It became overextended run. And then because it's so overextended, it had to have this complex ABC pullback that breaks back down below the 1 hour 50 MA. And many people get sketched out. They're like, hey, this is bearish because it broke back below the 1 hour 50. But when you're looking at the 4-hour chart, I mean, this is still very bullish, right? It just went into this double bottom, broke out. This is when it kind of should have pulled back for maybe a CBO, but it kept on fucking going, became overextended, and then it required a deeper pullback, and it's still typically the first retest of the 4-hour 50 MA. Not always, but it's typically still the first retest of the 4-hour 50, just like the CBO. CBO is a break and kind of like the first major retest. Well, a lot of times the CBO is missed and then the ACB happens. You know, so the 4-hour chart is, again, very simple. It should always kind of be like a big move, big breakout move, and a deep, complex pullback down to the 4-hour 50, roughly 0.618. And a lot of times we might have some levels, some horizontal levels, some trend lines, and so on in this area. And then again, we're looking for a deceleration, some sort of price action pattern. Now that price action pattern will always be on a 1-hour chart, right? So the 4-hour chart will always look like this. We went through the daily. We're in a similar, the daily's similar, right? It's just the 4-hour chart has more candles, right? So the trend is a little bit more developed. Now the 1-hour chart again is more developed. So breakout move, and then it went into this kind of deep pullback. So a lot of times you can be watching this and expecting it for like 2 or 3 days before it actually happens, right? So this ended up pulling back, and now you're looking for some sort of like a price action pattern. It's typically like a falling wedge, a flag pattern, which are continuation patterns, right? So it's typically like a continuation price action pattern, such as a falling wedge, right? Or a flag, which relatively looks very similar. And then again, you're looking for like that bottom and then a breakout, right? So that's kind of what this is. The bottom to double bottom, reversal candlesticks, boom, breakout, right? And again, you're looking to get a 2 up to the tops, and stop loss nicely protected below the pattern. Yeah, you know, so here's another example just for this idea section part of it. So on the left-hand side, we always do the idea and then analysis. Right-hand side is always execution management, right? So let's just kind of finish the idea, right? So we had this daily break and retest, boom, right? On the 4-hour chart again, wave one, wave two, and a big kind of overextended wave three. Typically something happens. There's like news or some shit, right? And it just falls massively, or it has this big wave three run that it then requires. It's still bearish, but it requires this kind of deeper, complex pullback, right? And up to that 4-hour 50. I don't have the fibs drawn in here, but again, if you draw the fibs from the bottom to from the top here to the bottom, this will be 0.618. I don't know why I didn't draw it in. I should have, but it would have been roughly 0.618. Yeah, and then you're looking for, on the 1-hour chart, you're looking for some sort of a price action pattern in that area. In this case, we had this kind of ascending triangle, and then double topped again, hit that area and started to reverse, and I went short for that continuation, right? Advanced continuation, breakout. The continuation is kind of on this 4-hour / daily, right? So the continuation is on this 4-hour. We're looking to continue that wave 5 run and continue the daily bearish pressure after that quick little pullback. And the breakout is on that 1-hour. Advanced continuation breakout. And the last example here that I'm going to show you is again very similar, right? So daily chart, big move, quick pullback, continuation, right? On a 4-hour chart, again, wave 1, wave 2, big wave 3, right? And then it required a big wave 4 pullback to roughly 0.618. In this case, we have a lot here. We got the 4-hour 50, we got the 1-hour 200 or 4-hour 200, double tops, very good candlestick formation. Like this is solid. This is a very good example. On the 1-hour chart, I had this flag drawn in, right? So I was probably waiting for like a double top. It never happened until here. And I probably could have been jumping into this trade right here, but I waited for, I ended up jumping in, just a few hours later, right? As it started to break down right there. And then developed this kind of symmetrical triangle, and I broke that later. But I kind of jumped in off of like the double tops here as it started to reverse. Right, and then I'm looking to continue that wave 5 run, right? So on a 4-hour chart. So wave 1, wave 2, wave 3, wave 4, big complex pullback, and then wave 5 back down to the lows, right? So continuation on a 4-hour and a breakout on a 1-hour. So I think we covered the overextended wave 3 run, targeting wave 5 run, right? Because of the overextended wave 3 run, there's typically going to be a complex wave 4 pullback, like an ABC giving us a wedge, a flag, right? Something like that. And then it typically retraces all the way down, all the way to 0.618 Fibonacci retracement on that 4-hour chart, right? And it's a break and retest of the 4-hour 50 and the 1-hour 200, right? Which 4-hour 50 and the 1-hour 200 are relatively the same level. And we're trading through the 1-hour 50 EMA. So it's a continuation on a 4-hour of that 4-hour 50. It's a continuation, but it's a breakout on the 1-hour through the 50 EMA. Right, so that's kind of what we covered. So let's go to a drawing, and then we're going to dive into the entry, target, stop loss, which is pretty simple. And I'll cover that in the drawing. And then summarize in the examples again. So remember our drawings here: ABO, IBO, CBO, wave 5 CBO, right? We covered the wave 3 CBO yesterday as well. That would have been if like it was a retest of both the 1-hour 50 and the 1-hour 200, which is also the 4-hour 50, right? So similar to an IBO, it's just it breaks both, right? Now the ACB will, it will look similar to this price action. So let's kind of draw it out Let's maybe draw in a new pattern. What can we do now? So we have a triangle, we have a head and shoulder, we got a double bottom. I mean, that covers the major patterns. So price action is trending down, and then let's just say it kind of like chops around for a little bit in a rectangle. You know, so chop, chop, chop in a little rectangle or a range, right? So forming now this kind of range. Until it breaks out into wave one, right? So wave one breakout. And let's tighten this up a little bit. So we're gonna run out of room. Right, so when we tighten this up and we go into wave one breakout, right? And a wave one breakout, obviously, like there's gonna be a 50 EMA there, 1 hour 50 EMA, somewhere when it breaks out, right? So let's just toss like a 1 hour 50, you know, like somewhere here, this breakout, and get our Fibonacci retracement in here for this breakout, and then it pulls back, you know, to retest 0.382, 1 hour 50, rectangle, and so on, and therefore go into a wave 3 run, you know, and we will have the 1 hour 200, which will be the 4 hour 50, right? Let's just assume this is a 1 hour chart. All right, so we're gonna have the 1 hour 200 roughly up here. And price action is just gonna fucking break out, you know, just run, and maybe gonna have a big move. Like it never pulled back for the CBO, you know, it just fucking went big move on news or something, right? So now it has this kind of deeper price action here that now the, you know, the 1 hour 200 slash the 4 hour 50 will be relatively kind of like lining up somewhere around that 0.618, because it had that kind of big move, right? It never pulled back, and it wasn't going into a strong trend. It just kind of fucking pushed, right? So the 4 hour 50 will be like something like this, you know, roughly in this area, you know. And the 1 hour 50, the 1 hour 50 will be pushing. And what I mean by pushing, it will be pushing like above, you know, like really pushing above all that stuff. And then, yeah, we're kind of gonna go into 1 hour 50 will start to kind of slow down. And we're gonna go into this kind of bigger pullback here. Maybe an A, B, C, boom, into the 4 hour 50, 1 hour 200, and breaking back below the 1 hour 50 EMA, right? Giving us kind of a falling wedge price action pattern or something like that, you know? Or a flag. It'll typically be like a squeeze like this, you know? So the first pullback, wave 2 was a simple pullback, and then it just ran, and then wave 4 is a complex pullback, right? And now we're bouncing off the 4 hour 50, 1 hour 200, and trading back into the 1 hour 50 MA, you know? So yeah, from a position sizing perspective, we're looking for, again, entering roughly in this area and targeting 2-to-1s to the tops, right? So again, this is going to be targeting a wave 5 run. So we can draw our fib extension from the bottom of wave 3 to the top of wave 3 to the bottom of wave 4. And 0.618 will typically, again, be somewhere around the tops. So we want to make sure that we're getting a 2-to-1 on this position before the tops. All right, so entry kind of at the bottom there. Stop will typically be like around 0.75. If we pulled back down to 0.618, our stop is like at the next fib level, right? Targeting back up to the tops and maybe a little bit less. And we can go, a lot of times we can get like a 3-to-1 on these, or we can just enter safer, a little bit higher, and just go for a 2-to-1. I typically just like to go for a 2-to-1. So position sizing will look something like this. Right, so it's like, it's similar to a CBO, but it's different because of the 1 hour 50 MA is above. Right? So back to the screenshots here. Let's go back to our window here. So we were talking about, now that we had our drawing, we're looking at the entry. So the entry is a micro time frame trend change at the 4 hour 50 MA and the 1 hour 200 MA, right? Target is 2-to-1 to the highs and lows on lower time frame. So back to the top, back to like the top of wave 3, right? And stop below key price action, support and resistance levels. Right, so that's kind of what we're looking at when we're talking about this position sizing here, right? Stop below the key levels, below the price action, below the 4 hour 50, below the 1 hour 200, enough so that you can do P1 clipping the low, right? And 2-to-1 back up to the tops or better. Entry around that 1 hour 200, 4 hour 50. Right, so let's kind of look at our examples here again. Right, so we went through the analysis here. There's pretty much always going to be MACD divergence on a 1 hour chart too, as that pattern is developing. Now entry on a trend change, as if we're getting the top of that pattern and we're like, yeah, this is a good pattern now. We're starting to get confirmation. This looks like it's going to fall, right? Then you're looking for a micro time frame trend change, whether it's 2 minute, 5 minute, 15 or less, as it's kind of giving you that confirmation, that double top or that completion of that pattern, and starts to reverse and break down. So entry on a trend change, just like every single other strategy, is the same entry on a micro time frame trend change in the value area, which the value area in this case is around that 4 hour 50 / 1 hour 200, right? At the kind of bottom of the pattern or top of the pattern. And then we're position sizing it so that it's 2-to-1 back down to the lows, or more. Now, not extremes. We're never talking extremes. We're talking more like to where like the price action kind of consolidates or where there's like a clear bottom. We're not talking extremes. Like extremes are going to be much harder to hit than I would say like the open and close prices. So whenever we're talking about like targeting the 1 hour highs or the 4 hour highs on an IBO 1-to-1 to the highs, on a CBO 1-to-1 to the highs, we're talking more about open and close prices or better, not the extremes. Extremes are going to just be much harder to hit than open and close, right? So on a 4 hour chart, open and close, right? That's the target, not all the way down there. Open and close roughly in this area for 2-to-1. 1-to-1, we're not really, the 1-to-1 is just going to end up somewhere in the middle. We're mainly just position sizing this for that 2-to-1. Yeah, so execution on a trend change and then everything else stays the same, right? Management happens as price action breaks that 15-minute trend, which it started to break down here, but it never broke the trend. And then it pulled back, but P1 could have been done here. I was just kind of looking for this trend breakdown, but P1 typically kind of happens in this area. Imagine there was just like a one extra candle break. I would have done P1 and clipped a high. But instead, price action kind of half broke down, pulled back, and then broke down. And then I just jumped right into P2, clipping this high, you know, rather than just going up there to P1. I just did P2 because that's kind of what P2 price action looks like. You know, price action breaks down. If this was one candle more, I would have done P1. Then a lot of times price action pulls back, forms a lower high, and then falls again. And that's when I do P2 clipping the tops. So in this case, I just went straight to P2, you know, and removed pretty much all risk. And then the shit just fell, you know, so I didn't even like do P3 on anything. I was just sitting here watching this thing, and it just kept on trending, and it just fell, accelerating. And I was probably just sitting here watching this, waiting for a manual close or something, and it just hit target. So pretty simple. Most likely news or something. Now here's another example, right? So entry at the top of around that 4-hour 50, right? So 4-hour 50, we got double tops, little inside bar / high test. 1-hour price action is again kind of like these double tops, triple tops, and then start to break down. In the breakdown, I entered maybe a little bit later. I could have probably entered sooner, like right there. I ended up entering a little bit later. Yeah, kind of, yeah. But I could have probably entered just a little bit sooner, like right there, you know? So entry on the breakdown, again, micro time from kind of trend confirmation. And then price action, you know, fell. And, you know, it already kind of broke down that 15-minute trend pretty much at the entry. So as it fell, I just did P1 and I clipped these highs, removing half risk. And then price action consolidated, you know, never breaking the highs, so never topping me out. Just holding the highs. That's why you want to have a good stop loss, you know. Even when you do P1, you want to be like still protected. So just chop, and then it broke, you know. And that's when I did P2, removing risk. And then again, this was a trendy one, you know, so just trending, pull back, fucking trending until it started to really slip. And that's when I started to all of a sudden start clipping P3, and then started to slip more. And eventually I ended up exiting right there. So in this case, I was targeting 3-1 and I got off for 2-1 right there. A little bit more choppy, you know, when things are more trendy like this, you know, management gets a little bit more trickier. You just gotta be a little bit more chill, a little bit more patient. Let the things play out. Whereas when shit is flying like this, it's easy management. It's just flying, you know. When it's choppy, you just gotta be a little bit more patient. Let the shit make its thing, do its thing, chop around until it breaks out. And here's another example, right? So again, entry at around that 4-hour 50 / 1-hour 200, pretty much on it, you know, double bottomed, reversal candlesticks, price actions breaking out, right? Entry. 2-1 before the highs. So I was probably like 4-hour open and close, a little bit better, you know, in 1 hour, then stop nicely below the price action. And, entry on a trend change, and in this case I kind of ended up jumping in on it on this 15-minute break right there. That was just kind of what I felt most comfortable in it, and it was still in value. I was still able to get position sizing and stuff. So a little bit of a later entry, not an aggressive 2-minute, which I probably could have even done like a 5-minute, you know, but I just kind of jumped in when on a 5-minute chart, kind of like had a clear breakout. I probably could have jumped in there or there a little bit more aggressively. But again, 15-minute was still in the value area, so I guess I kind of just opted in for the safer option. And then I don't have my management here. For some reason I just didn't annotate. That's why I say make sure you always annotate. But this just kind of kept on trending. So somewhere maybe right after, I probably would have done P1 and just clipped the lows. Pretty much minutes, 30 minutes after entry on this pop. You know, because that would have been already like this pop right there on a 1 hour chart. And when that happens, it's safe to clip the lows, you know. So I probably did P1 right there. As this 1 hour chart had this strong pop, which is about 30 minutes after my entry, and clipping these lows of P1, right? So that would have been like right there, right there on a 5 minute, and like right here on a 15 minute. Very clear breakout on a 15 minute, right? So that would have been P1. And then P2, you see how P1 would have been right there. P2 pulled back, and then it broke out. And as it broke out, I probably would have done P2. I most likely did, clipping this low and removing all risk. And then nothing, you know, chop, 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 hit one, pulled back, chop, 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 chop. And then it started to run the next day as the day opened up. And it broke 1-to-1, pulled back, continued. I probably would have done P3, clipping this low, locking in 1-to-1, pulled back, continued. I probably would have done P4, clipping this low and locking in 1.5 or whatever. And then it just ran, missed target, hit target. And probably here I was just waiting for an exit and then just reverse and hit target for it too. Right, so P1, P2, and then just chill until it goes nicely into that 1 hour area, and then you start to do P3 until either you're out or targets hit. And that kind of wraps it up. So going back to our notes here, right? Entry, micro time trend change, 2 minute, 5 minute, 15, maybe more aggressive at the 4 hour 50 and the 1 hour 200 EMA. Right, so we covered that. Target 2-to-1 to the highs or lows on the lower time frame. And we're not talking like extremes like the wicks. We're talking more like a little bit safer, open and close prices. You know, we want to have a nice, easy target to hit. You know, we don't want to be like pushing to the top, to the max, to the extreme, like safer, you know. So think like not the extreme, which at the extremes are like the wicks, the top of the wicks. Think like open and close prices on the 1 hour, 4 hour or better, you know. So that's the target, 2-to-1 to those highs, and stop below the price action. You know, protected by the price action. So below or above, it should be below or above in these notes, right? But protected by the price action and those key support and resistance levels, right? If it pulls back down to 0.618, it's typically going to be like the next fib retracement level. It's always going to be nicely below. You know, that's kind of what I'm trying to say. Based on all these examples, if we kind of just quickly look at the stops on these 3 examples I showed you here, right? So 1 hour stop loss, it's going to want to meet, you know, nicely below the lows so that you could do P2 or P1, I mean. Here's the other one, right? Nicely above the highs, right? Not clipping because that's going to be P1. We want to be able to do P1s. We want to be nicely above the highs. And then on the last one here, again, not clipping, we want to be nicely above the highs and protected, right? So that we can do P1 and clip the highs. That's it. And you're always going to end up with this if you're targeting 2-to-1 down to the bottoms. I think that's it. Advanced continuation breakout. Nice strategy. I like it a lot. Very unique. And hope you enjoy it. There's going to be many more examples of this as we go on. But that's it for this lesson. And I'll see you in the next one, which is strategy 5, the WTF, the newest edition. See you there.